Welcome, guys. It is 9:02 p.m. Sunday, March 5th. Welcome, everybody, to Digital Goats Academy. I am your host, the Digital Goat, man. Super excited for this week, guys, man. I see a lot of potential in the market. Not to mention, we have that call that's going on with Fed Powell on Tuesday, so I'm eager to see what he says. Just because I think everybody can honestly say we don't know what's going on with the dollar at this current time. So I'm gonna give you guys just a little bit of what I'm looking at overall, and we'll just kind of go from there. So I do have a pathway forged out for NZD USD. I'm looking for it to actually get bullish tonight. Right now, it's currently selling. So if it breaks this previous low right here, clearly it wants to push down and create support right here. But this is just my thought process. I'm not saying that this will happen exactly, but I'm pretty good at doing this. But and I like to give a projection for what it may do. And even if it doesn't, forge this path to the T, it's still something that you can use. It's like, prior planning on assessing what the market may do because, and we did this last week. That's the reason why I even bring it up today, is because we did this exact method last week where the market was bullish for, I believe it was Euro USD. So let's actually look at it. It's easier if I just show you guys. Do I still got, okay, perfect. So I still got actually the annotations that I had prior to that. Can I see your application? Blah, blah, blah. Okay. Ignore all the craziness, guys. Let me see who's on. Oh no, I didn't mean to do that. Who do I have on? Blah, blah, blah. Yeah, y'all can interact too. I already cleared out my introduction. So my team, y'all can interact if y'all want. Y'all free to talk. This isn't Digital Wednesdays where I'm just teaching. So if you guys want to chime in on something, y'all free to do that if y'all want to. But anyway, last week what we were looking at, we're looking at Euro USD. So Lou, I don't know if you remember. I know you may not be in a position to talk, but if you remember, I was showing you and I forgot who was on. I forgot his name. But anyway, you and the other guy that was on when we were talking about Euro USD. So remember, we were looking at it to buy up, and it did buy up. I think you were more focused on USD JPY, right? So it did buy up, and well, trying to see what's the better time frame. I guess it doesn't matter. So remember, we were pretty much down here, right? We were down here for the market. I think when I was speaking to you guys, I was saying that I believe that we're bullish from here. Matter of fact, I think it was this zone right here, this black line. I was like, I think we're bullish from here. That's based off the momentum, which the momentum did carry us upward. But I was saying, one, we need for price to break that black zone that I have right there, right? So we needed price to pretty much do a number like that. Now, when I addressed it to you guys, we were like somewhere up here, but I still had the zone. So the market did break and retest lower than this zone. So if somebody was paying attention, they could have had a lower buy, but I was already like in drawdown up here. So I just had to wait for the market to correct itself. So it did do this. Let's actually see it in real time, right? Oh, how come it was supposed to stop? How come it's not stopping? That's scary. Anyway, it broke above. So this is a good area for me to, see that the market broke above. This is what I was looking for when I was telling you guys that I wanted to see the break. but it would not break this entry right here of 0.6215 of that price right there. Right, kept on rejecting. Now, the one thing that I did mention to you guys, that if you know, there's a possibility that this could be, you know, a move in order to sell down. We don't know where that area is going to be, but I said that before we even had this four here, right? I had already had this line, but I said that that would be the fourth touch. I even mentioned that based off of what we know about, you know, two to four touches, the fourth touch should be the breakout, right? That's what we were talking about. The fourth touch should be the breakout. And normally the fourth touch is by itself, but sometimes depending on the time frame, it can be embedded within the third touch. You would just have to find it. If the market got like stupid bullish from here, that means the fourth touch was you know, embedded within this retest of here. Same concept when we're looking at a range, but people for some reason want to ignore this on the like on the trend side of things. So yes, we use the 2 to 3 touches when, like, I mean 2 to 4 touches when we're ranging, but we also use it in a trend as well. And everybody has to understand, like, use that information to make sense of the market, because you spot that stuff when it has a big breakout, you'll be able to pinpoint that. Now, sometimes it's fake out breakout, but either way, look what the market did, because we already identified it. I said that if it doesn't break this fully, or if it breaks this is one of your first entries. If it breaks above this and come back down, that's one of your first entries. If it breaks below that, then now you're looking at another lower entry right here. If it breaks below that, you're looking at an entry right here. I gave you guys pretty much the pip count on what you would be risking if you decided to enter higher up. So if you're looking at it, that's, you know, about our 3%. If you actually use that type of that type of stop loss. But again, if we got it at lower entries, we could actually, you know, have a better risk to reward ratio, especially if we would have entered right here. Which, what did the market do? Now, because I was prepared for it, I didn't know how low it would go, but because I was prepared for it, look what the market did. And we managed that. Now, if you weren't paying attention, or, you know, you were looking at the market, I don't know, you thought that you were clear, it got you, or it put you in the drawdown. If you were watching it, you probably panicked and closed your trades out, depending on who you was as a trader. And I'm just talking about everybody. I'm not talking about, you know, people within the group, but just anybody. But look what happened. Now, that happened fast. That happened extremely fast. So you had to have been paying attention to this in order for that to, why did it not? That's what I wanted to do. You had to have been paying attention or have a limit. I'm not even sure if the limit would have even caught it. But look what the market did after it came to an entry. We identified one on the 2 to 3 touches, but also in a trend and pretty much a breakout candle. Perfect retest, even if you weren't even like looking at the market. And this is where we're at currently. We're currently bullish within this market. I mean, too easy, right? Especially like if you're planning for it. So that's one thing that I wanted to address, that, you know, we don't know where the market is going to retrace to, but we can be in preparation. And especially if we collected all our funds up here and said, man, maybe you did get in like somewhere right here, but if you collected all your funds up here, you had a better entry, which means that you could have bought right back up to the immediate area where you got out of, potentially. You know what I'm saying? How do I get rid of this? So right now we're currently retesting. Overall, I'm looking at this market to stay bullish, right? I'm looking at this market to stay bullish unless, you know, something else happens within the market that I'm not paying attention to. Who knows? Let me look at NZD because I was in that trade. Looks like it's heading lower than I anticipated. No, it hit that. It hit that floor again. So if you see, this thing is playing aggressively, creating support on the smaller time frame. Yes, it hit that floor again. So it's ranging right now, but I mean, this thing could continue to fall. But either way, I'm looking at these areas to possibly return back down here and then give us a better buy entry if it doesn't decide to get bullish from here. So overall, I'm still bullish on a lot of these pairs, but if we just look at the dollar, let's look at the DXY. So DXY actually came down and did it collect that gap? Is that gap that it made? I thought it created another gap. So there's a gap right here, if you guys can see. The DXY created. Crypto Drum, he's on his Zoom right now. I think the link is in the announcements. Oh, snap. Somebody message whoever's trying to get up in the link. So here's the gap. The market, it looked like it collected that, but this to me still looks like a continuation of a selling move. I just think that is retesting, pretty much doing the opposite. Now I know Santana was on here the other day, and I showed her pretty much a cool way of looking at the market. But I'll show you guys that later on the week. Just showing Euro USD against the dollar, and if you were pretty much selling against the dollar in 2021 all the way up until the end of 2022, you would have been making bank. So to me, this was just a liquidity grab because we do have support here. Anytime there's some support or resistance, the market's going to react off of that. But I think it just wanted to retest this candle, and then we're still going to continue to bring this market down. I mean, just look at it. It's bearish, right? Nothing else is really, I mean, it broke out a consolidation, but nothing else is really saying that this market wants to go up. But again, we'll see. I anticipate it to come down, and then Tuesday, we want to obviously stay out the market before 9, because stuff is going to start going crazy just because of Jerome Powell's talk. I anticipate that the market will stay bearish, right? It'll stay bearish, and then what it'll end up doing is getting extremely bullish after it dips down a little bit. But that bull run is just to come back to a selling position. So we'll figure out where that selling position is, because they've been basically saying that we're trying to edge towards 2% on the 10-year yield. I don't think we're going to see 2%. I think we're going to see close to it. So we're just looking at price action, right? We're just looking at price action. Price did break out of this area, and for what it looks like it could potentially be creating a bullish flag, right? Let me see. When did I mark this up? I marked this up. Yeah. I mean, really showing you a bullish flag, but we need to break above this level, right? This is consolidation. We need to break above it, which I do think that we will. But what I think is going to happen is that in their attempts to try to drive the market, now this is just purely from technicals, right? In the attempts to try to drive the market down to 2%, which is like all the way down here, like 2%, that's a long way. They're not going to 2% before there. I just don't even see that. Like they're talking about, that's crazy. I don't even see 2% just from like as a trader. I can maybe see like, I guess when they say 2%, maybe they're saying in the ballpark of things, but 2%, that's kind of, I don't know. This is kind of OP to me. But anyway, you see we have a gap right here within the market. Again, just applying technicals. Well, what I think is going to happen is in their attempts to try to bring inflation down once, which that will benefit, America, then, the United States, then bring it down inflation. I don't think we're going to hit 2%. Hell, I don't even think that we're going to get into 2%, like the threshold. What I think we're going to do is based off of like, price action and technicals, we're going to come down as low as we can to create maybe some new support down here, maybe even retest the previous high that's up here. and then get bullish from there again. More than likely, well, I wouldn't even say more than likely because I can't say anything about this market. The only thing I can give you guys is the information that I've been tracking since like 2022. And that Jerome Powell has never stated, him and the Federal Reserve have never stated that they are seeing the market, one, getting pushed into a recession, but also they believe that, price of the dollar is coming down. They always kind of dance around the questions. They always mention things that if once as a trader, you'll be able to piece that information together and take it for a grain of salt. You know what I mean? Like as far as you can throw the wind, but it's still when price action starts giving you the data, then it starts making a little bit more sense. So for me, with their attempts to try to bring the market down to 2%. I know this may be like a little advanced for people, but just follow along with me. Again, we're just talking technicals. We're not even getting into the fundamentals of the 10-year yield. You do that on your own time or when I do a class for that. But on the technical side, guys, once we get in their attempts to come down to 2%, I do believe, again, based off the pattern, we're going to come down, drive the market as far as it can possibly go within reason, and then get bullish from there. That's just my logic, where I believe that the dollar is still overall bullish and that it'll come down with like full fury whenever we get back to the highs of 2001. 2001 is where I am looking at for the dollar to be to be bearish, and maybe not even like that high, maybe like a little bit, that low, maybe like even a little bit higher of like 125. Because if you just look at you just draw a fib on the dollar, like on like the 12-month time frame, you guys should be able to see that 125, I think it's like the 61%. So look where the dollar has overall been. So if I just take my fib and draw from this high point of the DXY, right? High point up here, right? And go all the way to the bottom of where the data has presented. Well, actually, I was even shy. It's 130. So there's a possibility that if the dollar doesn't respect the 50%, that it's going to drive itself up to pretty much 128. Yeah, 128. That would make super sense to me. So there's a possibility that the dollar may rise as far as like dealing with inflation. Because I mean, just look at it. What is telling us besides that? What is telling us that this market is like trying to be in a downtrend? Everything about it is telling us that it wants to push up. We even have a break right here, and I know it may be like a little cluttered, but it's like, look at the market, guys. Look at what we've been taught. Look at what you've already been seeing that makes sense to you within market structure. We know that the market's going to create new levels of support and things like that. So I am looking for this market to come down all the way down to this level of support. That's where I'm looking at the dollar to pretty much buy up from, or come down a little bit more and then get extremely bullish from there, because it just makes sense, right? So right now, I do believe that we're in a phase where we're going to see the dollar start to push down some more, obviously, ranging and stuff. But overall, I think that's going to actually pull down the market, which again, kind of backs up their moves on trying to get the market to come down to 2%. And what are we going to see from that? When we see the dollar start to get bearish, we're going to be able to see other pairs, such as NZD, Euro USD, get bullish against it once it's physically stronger against it, guys. Because like NZD USD right now, like it's kind of bearish against the dollar, while other pairs are a little bit more bullish or a little bit more stronger. All right. Let me see. On the 12 month, it looks crazy bearish, but I think it's going to pop up before it comes down. Everything that I'm looking at, I want it, look at this. I want it to pop up before it pulls down. Wow. Okay, break and retest of this zone. So I was actually looking for Euro USD to buy up Just for, I actually want it to be an aggressive buy, but I'm not looking to risk much. Let me see. Was everybody able to get in the chat? Hold up. Let me see. Blah, blah, blah. What up, Tashawn? What up, Ryan?
What's good, bro?
What's going on, Patrick? Chris. I think I said what up to Chris already. I know Lee and Lou was in here. But yeah. Yeah, I'm looking at Euro USD to get bullish. I have a small risk position for it. I only have it like at 11 pips because I do have another potential entry for it, but I'm not trying to get chaotic on Monday. What's up? Go ahead.
What's up, bro? I'm muting myself now. My bad.
Oh no, you good? Y'all can talk. Today is this is a day where everybody can talk, man. If you got questions and stuff, if you want to chime in, y'all good to talk. It's free game. But I have a potential entry for Euro USD if it decides to come down a little bit lower, which is at the 0.6215. That's my price entry at another position. Now, here's for all my people that already been following us, right? What do y'all know that I spot on Sunday? I'm gonna just go ahead and say it because I know maybe like one or two of you guys know. It's called a Sunday candle, and I've already identified the Sunday candle on the 15-minute time frame for Euro USD, right? It's just a candle that, you know, it helps us identify what the market is doing on Sunday and Monday so we can take advantage of it, knowing that we're really in scout mode and not in like big positions move. So right here, this is the Sunday candle. And basically the Sunday candle is the first candle you spot after 7 o'clock that is opened with the market. Sometimes it'll be hard to distinguish, but normally it's after a gap or it looks kind of funny compared to other candles. And I normally see this on the 15 to 30 minute time frame. Can't find it on the 15, look on the 30. And you'll see that it's actually represented on other time frames as well, such as like the 45, the hour. So the higher the time frame that you discover this candle, box it up on that time frame. That'll give you the high and low of Sunday. You know what I'm saying, for that time frame. So you'll need that information. So right now, the only information we have for Euro USD is on the 15-minute time frame, because if I go to the 30-minute, I probably don't see it anymore. Yeah, I don't like how this looks. So I always capture it in a way that I could see the candle and less of the wick. So yeah, you could identify it like this, but the fact that I already know what it looks like on the 15, that's what I'm gonna go with. And what I'm gonna do is I'm gonna draw two lines. The reason why I'm gonna draw two lines is because, again, that's the high and low of that candle. The high and low of that candle. Man, this thing is getting bullish. So that may have been your move to take a trade, but we'll wait. We'll wait. I'm already in it, but we'll wait. This is important because if the market, whenever the market retests this candle, it breaks out of this candle. You see how aggressive it broke out of this candle? That's what you want to see. 30-minute time frame straight. Broke out of this candle. Then it came back in the zone. The reason why I drew these lines, because again, it's the high and low of the candle, being the high point of this candle, the low point of this candle. Guess what the market did when it drove back into it? It came a percentage of this box. So even if you're not experienced with Fibonacci, if you just understand that Fibonacci allows you to gauge the percentage of what price moved, right? So like, you know, you can cut it into pretty much quarters of your money. So what I do is I draw a fib, again, in a direction that I believe the trend is going. So if this was selling, I would have drew it the other way, but it really doesn't matter, because as long as you know where 50% is at, you'll understand that whatever is on the opposite, you can flip it. So 2, 3, 6 is really 7, 8, 6 if I flip it. You see what I'm saying? Because as long as you know where your 50% is, 100% and 0 doesn't change. So everybody should understand that concept. It's like, you really aren't wrong with fib, but you do want to practice using it the correct way, right? So you see the market drove all the way down to 61% of this market. Normally, what I see within this is that the market will drive down 50%. So at least when I'm looking at this, when there's a breakout, So when there's a breakout of the Sunday candle, I'm at least looking for it to return 50% or 100. So it could return 50% if you guys look. Let me make it a little bit thicker. What happened? Oh, that was the line. That's why. Okay, I see. I was confused. But anyway, 50%, right? I'm normally expecting 50% or 100%. 50% or 100% based off the Sunday candle. Now, the Sunday candle isn't absolute. That means you could be wrong, but also if you're wrong, it still puts you in the right position. Now, sometimes you'll get caught in a range in market. So you want to make sure when you identify this, that the market is still kind of trending up. You know what I'm saying? It's not necessarily ranging. Now, right here, it is consolidating, but we can see that it's trending up because of this consolidation out here. It broke out, retested, is retesting this candle. So now we just kind of got to wait to see what the market is going to do. But say that this market blew through this, right? It got extremely bearish and just blew through this. Well, now I can still use this information, but I have to wait to see if this market is going to come back up to it. That means, again, remember I just identified that 50% to 100%, right? So if the market did blow through that, I just told you guys that it doesn't matter where your Fibonacci is. If you have it set up like mine, and I'm gonna show you guys, well, write these down and then I'll put a screenshot in it if you guys want these numbers, if you don't use Fib already, right? So you see all I did was flip it around. Now my 0 is 100 and now my 100 is 0. I mean, now my 0 is 100 and now my 100 is 0, but my 50% is about still the same. It'll be off like a couple of pips. It'll be about still the same. Now, say this market, and I'm not trying to get into like the teaching of a Sunday candle, but I want people to use this because this has been foolproof. This has helped us out a lot without having to think too much about the market. It's just like, okay, Sunday candle, box it up, see what it does. What's the trend? Okay, boom. I just take the trade for 30 pips, 20 pips, 50 pips, do it continuously up until New York or however long I'm trading. Then I go about my day because I know Monday is going to be a terrible day to trade. See what I'm saying, guys? Like, so even if we take a loss, it's like, all right, man, I saw that. I didn't see that coming, but it gives me more information for the week. So say the market blew through this. Well, now you're waiting for that 50 to 100% retest. So you can have a position that the market comes right here, but what if it fakes you out? Well, this is where you have to figure out your risk, because if we're already expecting 50% and we think 100%, right? And it shoots up 100%, well, where does that put me? That's only a pip difference on a 30-minute time frame. I'm not necessarily tripping about that. You shouldn't be. You know what I'm saying? Now, I know that it won't be perfect. So don't use this and limit yourself to just the box. Look at structure in the market. Look at where some previous lows at or where some previous highs at. You're still trading, guys. So it's like this just helps you put you at a better probability of making like a cleaner decision based off of what it's doing right currently. So if you look, the market is bullish right now. I know this for a fact because it's above my currently it's above my Sunday candle, and I always have it marked in blue, and I normally draw like my gold line. So I want you guys to start being more efficient and using that and see if it helps you. Don't just expect it to do. Don't expect. Look at the data and see what it says. Now, I was watching this market when it opened up, so I was confident that this thing was going to be bullish because I saw this it retested on the smaller time frame, then it retested on the bigger time frame. Never came back down to the original entry that I wanted. And this is something to kind of keep track of, guys, where it's like, don't put yourself at a limit where it's like, I need the market to come at this exact entry. You don't need it to do anything because it can say kiss my ass and, you know, take off on you or go down on you, whatever the case may be. That was probably an inappropriate way to say it. It's nighttime. It's nighttime. Anyway, anyway, guys, but currently right now it is bullish. I was already bullish on Euro USD, right? So you guys definitely missed that entry, but it could sneak a retest down here. But if this thing closes like this, that's the retest. Because if you just look at this candle, let's see what percentage it closed at. That is 38%. If this candle closes at 38% right here, the momentum is strong and it's taking off. So you got 30 minutes to see what it's going to do. Now it could spike down a little bit more. I can definitely see that. I would like that. But if the momentum is strong, it's building momentum at 38%. 38%, guys, no matter the time frame, that shows high momentum in that direction, which means that when it decides to turn around, it's going to blow through all this. You know what I'm saying? So say the market gets like completely bullish tonight. So if you miss this move right here, you can get in on the next candle, right? I would say just wait for the retest. But say this market gets bullish tonight and it gets bullish. If you see it get bullish, like say you get out of your trade, if you guys jump in this, say you get out of your trade and you see that this market is like, wow, man, I should have stayed in. No, you better wait, because what it's going to do is it's going to sell so aggressive that you're going to think that it's going to be a retest, and it's really going to be one of these numbers. You know what I'm saying? So just kind of watch and gauge the market. There's no rush because it's still 30 minutes. Use the time frame in the market, guys. Use the time frame in the market in order to make a cleaner entry, instead of just saying, oh man, this thing looks like it's taking off 15 minutes, wind it down, see what it's doing. Yeah, that this could get, if this thing doesn't produce a retest candle, like I don't like this. Like I don't like how this looks. So if it gets dumb bullish from here, like, because this is not a clean retest. And the reason why I say that, guys, is again, use your fib. There's no, we need at least a 38 to 50%. Yeah, this thing's going to get dumb bullish. That means it's guaranteed to sweep us tomorrow. So if it is like somewhere up here, do not think that this market is going to come back down here and give you a retest for a buy. It is literally going to take all this away, because there's no retest right here. Anytime you see that, or it could jab down, but you know, whenever it decides to come down, the sell will be the better option. And it just makes sense. It normally does this throughout the week, guys, where the market will give you like a bull trend, and then the data will come out on Monday and just drive the market down by New York session if it doesn't do it at like 7:30. So any move that you're making in the market, guys, and again, the market is still going to play its price action. So don't listen to me based off of time, but use still structure. So if the market does break up out of here for Euro USD, because we missed that better entry down there. Now, we don't want to get fooled, because we identified that the market could, in fact, retest this entry based off of the Fibonacci, right? This candle right here, we would like, if we were to enter, we would like to be around this position of like at least 50% or 38%. Now, this thing takes off and get bullish, which it looks like it's about to do. You have to gauge like your risk to reward. Where will my stop loss be? That's not a bad move if you said you wanted to just clear all this structure. Say if you wanted to enter this trade up here, that's 16 pips. You know what I'm saying? Like, and I'm saying that because you want your stop loss obviously to clear structure. But say like, you know, you try to wait for this entry potentially, or you have an alert set down here. All right, I can kind of use the same risk, but I can kind of use the same stop loss, but I have a lower risk. But again, guys, you just have to gauge the market. Today is Sunday, so the market never plays like favorites on giving you clean moves. It just does what it wants to. And like I said, I think the momentum is bullish, and then you'll get a retest here. It'll take off from there, and then New York will probably have our move where the market. Oh snap! New York will probably have the market push down on us like hard. And this is where I was looking for the market to actually crash down. It could do it lower than that, but you know, we'll just gauge to see what it's doing. But if we just look at the DXY, is it in fact selling like I mentioned? Yes it is. It's going to sweep that that gap that was made in the market. So yeah, everything's playing out pretty clear for what we want to see. Not to mention, if you just put a pattern on this, looks like a bearish flag, knowing that there could be retests going on. So yeah. clean, guys. So
Twan, you think NZD gonna recover, or you think it's gonna keep tanking?
let me see. I think it's going to be bullish. I think it's just ranging right now. Well, consolidating in order to throw people out. But if it breaks this price area, you can bet for sure that it's probably like selling. Look at this thing, confusing people, yo. So I'm still in my buy. I have a stop loss. That's like, again, I move on Sundays. I move tighter. I don't move like I would move on Tuesday, Wednesday, Thursday. So you only should be looking for short positions, and your risk shouldn't be like a lot. Nobody should be going Hail Mary. You know, I don't know if Lee is still on, but she's a perfect example. If you look at profits, she's somebody who can jump in the market and spend like an hour in it and then make like $1,000, yo. And that's kind of like the mindset you want to have, but she's only collecting like 10 pips off of that. So she's not even staying in the market. So it's like, and she does that definitely on Sundays. So you want to practice that methodology. It's like, you know, get in, get out, whatever move I see, clear it, but I'm not trying to hold nothing. I never play I'm just going to see what happens. It's Sunday. We got a whole week ahead of us, but there's good moves. There's good moves on Sunday. It just throws a lot of confusion to make traders get out. Again, make sure your stop loss and your risk management is adequate, because again, Sundays do give out more losses than like Wednesday and Thursday. So I was like moving right here. Look at this thing. But I think that we're still going to push up overall. Like if you just look at the dollar, as long as the dollar keeps tanking and NZD remains stronger than the dollar. I don't know if you still use that. Do you still use that currency app?
Of course.
Okay, bet. So as long as NZD remains, because NZD would be the defining factor against the dollar if it decided to continue being bullish.
Right.
But, yeah, so I think it's still going to be I mean, if it decided to be bearish, I think it's still going to be bullish. But again, I have this zone down here that I'm looking for it to remain above. If it breaks that, then I'm pretty much gonna cancel my trade at that point, because it ain't even worth it. Let me see. Yeah, 3 pips. So I think I only have like a 10 pip stop loss anyway. So yeah, it's gonna play around, dude. It's not gonna give us what we want to see. You just kind of gotta. Today is really the day where it's like you trust your analysis, and you know, it's either stop or profit, or you know, you see profit, then you get out and see if you can jump in again. So I always do that. If the market is showing me unsure, you know, not clean movements, I'll wait to go back and profit. If it does, I'll get out, and then I'll reassess the market to jump in again. So, you know,
that makes sense.
That's what we're looking at. This thing is really playing, but look at Euro USD, about to be out of there. You know what I'm saying? NZD is really that's where it comes into like just picking the right currency. And I definitely shouldn't have picked NZD like right now, probably like closer to like the close of its session. But Euro USD is the one that's the hot commodity tonight. It's giving you everything you want to see. Man, I'm gonna eat good off of that. Let me look at S&P real quick, guys. Oh yeah, I'm in S&P. You still in your buy, Lee? Are you still on?
Nah, I hit TP.
Oh my gosh. Oh my gosh. Let's look at your Nas. It ain't as thunderous as that's still nah. You would have put a standard on this?
I put 3. Well, no, I put a standard, but I went 30 pips.
Yeah, that would have been stupid. You said you went 30 pips? You got your 30 pips?
Yeah.
Oh my gosh. Yo, Ty, prime example.
Word.
Prime example. Not, and doesn't even have to, so you could do the math. If she used a standard on Nas and she made 30 pips, I'm not saying the number. I want everybody to do the math on their own, yo. And she done for the day and possibly for the week if she need to be. You see what I'm saying?
Facts.
So it's like Sundays, that's what it should be. I'm done. Like, I'm done. Like, what am I looking for? A stop loss? You know what I'm saying? That's what you're looking for. You spend more time in the market, a stop loss. But yeah, guys, that's what I'm looking at for the week. So I'm glad everybody jumped on. This will be pushed out midnight on my YouTube. So I'll drop my YouTube again just for anybody that haven't caught it already. So it will be on my YouTube, guys. I'll do that for any call that I do on Zoom. It will be in my YouTube. But if I do it personally on Discord, it won't be in my YouTube because there's no recording session. But I try to keep that for our personal sessions one-on-one. So anytime I do live on Discord, I urge you guys to jump on because it's more like interactions between us and stuff instead of my politically correct videos, because this is for YouTube. So I can't be, how we would like to be, you know what I'm saying, to enjoy ourselves. But hope y'all have a good night, man. I hope y'all make a lot of pips. Any of my YouTube viewers out there, guys, make sure you hit that like button. Make sure you hit that subscribe button as well. Always hit that notification bell so you stay up to date on my content, guys. And as always, see you guys at the top because we're taking everybody to the top with us this year. Peace out.
All right, bro.